trades Forex? Banks, central banks, investment managers, hedge funds, corporations and individual investors all trade on Forex. Banks of all sizes trade currency with each other through electronic networks in the interbank market. The interbank market is where the greatest volume of currency is traded. Big banks can carry out speculative trades for their own trading desks and can facilitate large or small Forex transactions for their clients. Investment managers, pooled funds and hedge fund managers trade currencies for large accounts. A few accounts you may be familiar with are accounts such as global foundations, pension funds and endowments. This specific group of traders makes up the second largest collection of players in the Forex market. Corporations involved with importing and exporting goods and outsourcing certain services need to conduct Forex transactions to pay for them. Some of the larger companies and corporations may buy the currencies they need ahead of time in order to reduce their foreign currency exposure risk. Interest rate policies of central banks and open market operations, the buying and selling of government securities in order to expand or contract the amount of money in the banking system, have a huge influence on currency rates, making central banks very important players in the Forex market. Any action taken by a central bank in the Forex market is done to stabilize or increase the competitiveness of that nation's economy. The final player in the Forex market is the little guy, the individual investor himself, known as the retail trader, aka you. Trade volumes of retail investors are extremely low in comparison to the big four previously described. With Forex education and guidance becoming more widely available, retail traders who fully commit to this path, persevere and realize there is a learning curve can become successful beyond measure. And by watching this video, you're already on your way. Keep going.